My name's Ethan Braid. Today we're going to talk about how much you can really lose in SPY ETF when we get a recession. The business cycle is real. We're looking at the last 67 years of the S&P 500 price level. Clearly you can see the pattern of boom, bust, boom, bust, boom. The last 15 years for SPY ETF have been incredible. Just an amazing bull market. And if you timed the last recession perfectly, you have made an incredible amount of money just on appreciation alone. If you'd put $1 million in SPY at the bottom of the last recession in 2009, your $1 million is now 7.5 times greater at 7.5 million. I believe that the last 15 years of nonstop gains for SPY has created a false sense of security for many investors. If you are 45 years old today, that means you were 30 in the last recession and you probably didn't have much money. And your perspective on risk and losses was probably a lot different back then. Now you're middle-aged and you probably have a little bit of money. But how will you handle losses when we get the next recession? Also, if you were 45 years old at the last recession, today you're 60 and you're probably getting close to retirement. And again, your frame of reference has definitely changed. You probably have significantly more wealth because you've been in your peak earning years and you've accumulated a lot of money. So when the next recession comes, your reaction to losses is probably going to be a lot different. So you're going to want to pay attention to what I'm about to show you. Here's an up-close look at the last bear market for SPY. 13 years, no appreciation on price. 2001 recession, significant drop over several years. And then again in 2008. What I'd like to draw your attention to is that if you had invested $1 million in the year 2000, a decade later, you hit a low of 453,000 just on price for SPY. That is incredibly painful. Mike Tyson says everybody's got a plan till they get hit in the face. I say everybody's tough till they get punched in the face. And the 2001 and 2008 recessions were like getting punched in the face. It really tests how tough you think you are when it comes to your investments. It really takes the oxygen out of the room. And I say this as a professional who's managed money for over 25 years. And I've met scores of people over the years who were all talk until the recession came. In other words, I want to take a lot of risk. I want to make a lot of money. And I'm like, well, are you sure? Are you sure you want to take that much? Oh yeah, I want to take a lot of risk. And then once people start losing money, they freak out. They change. So this is the time, while we're in the good times, to really assess your risk tolerance and make sure that you understand it. The long-term picture for SPY, if you're going to hold and reinvest dividends for over a decade, is outstanding. Look, the returns are there, but can you handle the volatility, especially if you're 60 or 65 years old and you're near retirement or getting ready to retire? Can you handle the volatility of SPY? Your coworker who likes to brag to everyone who will listen about how much money they're making in the stock market and how concentrated they are in SPY or QQQ, for instance, and they're just making so much money. That's the person who will be injured the most in the next recession, and they often sell at the bottom and completely destroy themselves. Mark my words. That is what happens. If you think that the first decade of the 2000s was a fluke, then how about the 1970s? This graph looks very similar to the last one, doesn't it? This is the period of 68 to 82, 14 years, no appreciation on price for the S&P 500. We had 4 recessions. Recessions are the gray bands. And we had 2 very serious market drops of 36 and 48%. Over 20 years ago, through the CFA program, and then again when I was in graduate school earning my MBA, I became exposed to the field of behavioral finance. This is the psychology of how investors make decisions with respect to their money. And I can tell you that after all these years as a practitioner, that people are heavily influenced by fear and greed. And so the recent years, it's been all about greed, the desire for gains. But it won't be long before fear comes back. And so for many investors today, they have not really experienced fear. I would say that 2020 and 2022 were just a warm-up. They're just a glimpse of what happens when you get in a real recession, in a real bear market for stocks, like I showed you from that 2000 to 2010 timeframe, or 68 to 82. When you look at those periods, it was very, very challenging. And when fear sets in, this causes people to lose their minds and make very, very irrational decisions with respect to their finances. Don't let this happen to you. Be comfortable now with the potential for losses in SPY in the future and know what your risk tolerance is ahead of a recession. Before the 2001 recession, I would say that most of the investors that I met in 1999 and 2000 were extremely overconfident. They had no appreciation for what could happen, and they were not mentally prepared for losses of this magnitude. And that is because we were in a bull market from 1982 to the year 2000, 18 years of up and up and up. At the bottom of the last recession, investors were overly pessimistic. You couldn't give stocks away. As a practitioner, when I would talk to people about investing in the stock market, people looked at me like I was absolutely nuts. Fear had set in for the majority of investors, and very few investors saw it for the tremendous opportunity that it was. Here we are 15 years later, and now once again, investors are overly confident, just like the year 2000. If you haven't lived through a recession, like I've shown you, or if you didn't have much money in investments at the last recession, then you need to ask yourself, are you comfortable seeing half or more of your money in SPY disappear, even if it's temporary? Eventually, we're going to get a recession, whether that's 6 months, a year, 3 years. It's coming. It's probably not too far away. And when that happens, you'll be dealing with a new emotion, and it's called fear. And how will you react? What you don't want to do is be the person who sells at the bottom. And I can't tell you how many investors I've met over the years who have done this. Usually, as I said earlier, it's the person with the bravado. It's the person who likes to brag to everyone else at their office about how much money they're making in the stock market. That's the person that usually sells at the bottom. You don't want to be that person. Mentally check yourself now during the good times so that you can get through the difficult times that are coming in the future and thrive in the long term. I hope this video was helpful. I hope this video gets you thinking about your investments, helps you better analyze what you're doing, and overall improve your family's financial plan.